Welcome back, guys. This is Dr. Satpute from Stock Market Files. In this video, we are going to discuss the Banknifty 10th June chart, that is expiry. The market is currently running. Market is going on. So, guys, if you look at the charts, we could have you can spot 2-3 trading opportunities here. Again, the indicators I'm using are the stochastic, Bollinger Bands, and the price action candlestick patterns. So you can use only stochastics and candlestick pattern, or Bollinger Bands and candlestick pattern. Either this combination or this combination you can use, right? But if you want, you can use these three in combination together, right? So, guys, if you look here, you know, here, here the stochastic was at 940. At 940, if you look here, the stochastic was in the oversold region, right? Always I say the when you trade using stochastics and candlestick pattern, the stochastic must be in the oversold region, or sorry, overbought region or oversold region. Overbought is above 80 and oversold is below 20, right? So if you are taking a trade on the short side, the stochastic must be in the oversold region, right? And there must be a crossover, stochastic crossover. This is percent K line crossing below the percent D line, right? This is percent D line, red line is percent D, white line is percent K, right? So faster stochastic, that is percent K, is crossing below the slower stochastic, that is percent D. So this crossover you must observe in the overbought area, and this must be confirmed by the candlestick pattern. If you look exactly here, there is a candlestick pattern formation called a shooting star. This is a shooting star. By the way, this is Banknifty 3-minute chart. 3-minute chart. Banknifty 3-minute chart. Right. So this pattern, this stochastic crossover is confirmed by this shooting star, which you can see here. And you see one more thing to confirm is this shooting star is exactly forming at the upper Bollinger Band. And I always say upper Bollinger Band acts as a resistance, right? So there are three things which we have for the confirmed trade. First is this candlestick formation at the resistance level. Second is this crossover, stochastic crossover in the overbought area, right? So with this confirmation, we can initiate the trade here, right? We can initiate the trade here with this stop loss, with this either upper Bollinger Band as stop loss or the high of the shooting star as stop loss, right? So if we would have initiated this trade here, you see from here at this point, if I show you, at this point the Bank Nifty was 34,930 around, right? So if you look, the price is 30, it was 34,930. So if you would have initiated the trade here, short trade here, you would have got the Bank Nifty went up to 34,783, right? So that means approximately more than 120, 150 points, more than 100 points, at least more than 100 points you would have got, right? So 930, 932, 780, it's more than 150 points, right? So you would have got these 150. That was one trade which you could have taken, right? So, guys, the another trade which we could have taken is, here you see, here again the candlestick pattern formed is a bearish engulfing candlestick pattern, right? Already, when the candle size is decreased, when the body of the candles becomes small, right, leaving long shadows, right, this is the indication that the market was in the uptrend here, right? So or in the consolidation. From here, if you consider this was up moving market, but here if you see the candlestick bodies were getting formed, small bodies were getting formed, that is the sign that the bulls are losing their strength, right? So that is one thing. Other thing is if you look here exactly, at this point, this is a bearish engulfing candlestick formation, right? And though not exactly at the resistance level, but it is this line nearly touched the, if not touched exactly, but it's nearly at the resistance level. This is the bearish candlestick formation, right? And this candlestick formation, bearish candlestick formation, is confirmed by the stochastic crossover, right? Stochastic crossover in the overbought region. This is overbought region, right? Here you see, right? So this is again a good trade. If you would have initiated this trade, again you would have got, let's see how many points you would have got. So if you would have initiated the trade here, it is roughly 34,880. So from 34,880, you would have got 34,800, right? Approximately 80 points you would have got, right? One way straight in next 3-4 minutes, next 6 to 9 minutes you would have got, right? So that was the second trade which we would have taken on based on our setup, right? Again, again one more trade you can see here, right? So guys, this was the candlestick formation, right? This is a beer harami, right? Beer harami sort of thing, right? Because huge green body, I mean huge bullish candle, and small red body contained inside this huge, right? So this is kind of beer harami, right? And this formation is exactly at the resistance level. You see, exactly at the resistance level, right? So this is Bollinger Upper Band, which is resistance, and you could have taken the trade. And of course, again, this is again confirmed by the stochastic, not exactly, but stochastic was roughly approximately or exactly at 80 level, right? 80 level, we had this crossover, right? So this confirmation, right? So with this confirmation, stochastic confirmation, the candlestick pattern confirmation at resistance level, you could have initiated the trade, and again you would have got a good amount of points here. If you would have initiated the trade here at 34,900 level, the market went up to 34,827, again roughly 75-80 points, right? You would have got, right? So these were three quick trades you would have taken. So that is how you can use the stochastics with candlestick pattern, Bollinger Bands with candlestick pattern. So thank you guys for watching this. Please stay tuned to watch other videos on other technical analysis topics. Thank you so much.